see two different sides of the analysis coming from two different type of market actors. The first type of market actor is the one that already know about Bitcoin and Bitcoin Treasury company. And the second type of actor is the one that has today the most political power in some nation states. This morning I had breakfast with one of the president of one of the largest banks over in France, and he was discovering the concept of Bitcoin treasury companies. And so he was not thinking about MSCI indices and so on. He was thinking about the stability of the euro. He was thinking about the macroeconomic consequences of monetary devaluation. And we had a great chat about Bitcoin and Bitcoin treasury companies and what that can provide in terms of global prosperity of the everyday people savings. And that's extremely important to do. At the same time, everyone woke up a few days ago with, of course, the discovery from a lot of the market participants that in fact there is some friction happening between Bitcoin infiltrating capital markets and traditional financial institutions, discovering that the success of the products issued by the likes of Strategy, specifically today with Stretch and Stream and all of the potential new products issued by Strategy and other comparable companies, are literally having the potential of disrupting traditional markets by taking in demand that would otherwise go to traditional bank deposits and traditional treasuries in the form of USD treasuries. And so I think that, yes, the market is scared right now around Bitcoin, and the market doesn't understand what is really happening with the price of Bitcoin, which is not really going up this year, while everyone was expecting 150 and 175. I think for most market actors, the most important thing to do is to zoom out and to realize that there is this exponential monetary expansion which is completely out of control. At the same time, when you meet with some of the largest financial institutions in the world, they have both sides to make work at the same time. The first one is to give access to Bitcoin in a way that is accessible to traditional players through stocks and credit markets with the Bitcoin treasury company products, and as well have all of the difficulties of the traditional fiat system. And so on one side, you have Bitcoin maximalists willing to short fiat and maximize their Bitcoin per share over time, and looking at the Bitcoin chart and saying, okay, I will be patient and I will continue to see this as an opportunity because the value is going up. It's only the price that is momentarily going down. And on the other side, you have traditional financial institutions that are literally just waking up. And so part of why capital B is potentially starting to outperform again some of its benchmark is as well all of the efforts that we are employing into the education in the traditional financial system. Last time we spoke, I told you that I was having 50 meetings with institutions over those 2 weeks. On Friday last week, I had a meeting with one of the largest asset managers in France and Europe, and the meeting was planned for 2 people. And in fact, they convocated 15 out of all of the different specific areas of this asset management firm. And that shows you the massive interest. And they really look at the last period that we had back in May and June as a missed opportunity. And what they see today is another opportunity that presents itself. And if you look at the different charts in the Bitcoin treasury company sector, at least of capital B, you see that a consolidation of major substances happening over the last 2 months. And then what is happening at the same time is the initial emergence of some frictions between Bitcoin treasury companies taking over capital markets, which are big words, but which are reality if you look carefully. And then on the other side, the financial institutions or some players that are willing to say, look, guys, it will be a bit longer than expected. But I think everything will resolve over time and Bitcoin will win and Bitcoin treasury companies as well.
Alex, I have a quick question for you because this is also something that we were talking about. Um, doesn't it, like, for us, it feels at least interesting or strange, all the conversation that we're having right now between MSCI, the timing, the conversation. What are your thoughts? Why are we discussing this now and not like long ago? Number one, like, of course that this is based on, or at least what we think is based on nothing. We don't have any proofs to say anything, so this is just us trying to understand the context and the situation. Um, and number two, it would be a follow up question to that because, like, it seems like very like uh, clearly this all of these companies are not ETFs, so it seems like a very low ball, let's say, kind of approach, at least for the comments and the analysis and what we're seeing that is happening on that front. So what's your take? What's your input? Like, again, why this now? The arguments, like, what's your thought on this?
Yeah, so this came out of a consultation document, so there is no decision that has been made to date, as per my understanding.
Mm-hmm.
This index is quite important because it defines which companies will benefit from passive flows in terms of investment in the world. That represents about half of those investments
Mm-hmm.
over time, and so that's quite substantial.
Mm-hmm.
For Capital B, it has a very low impact to date because we are so early in our growth that we were just getting started with those passive flows. We have some, in fact, already in France as well. We know that there could be an impact of 8 to 9 billion as of the information that is currently available. At the same time, Bitcoin doesn't need this. Bitcoin treasury companies do not need this, but still, it is better to get a lot of passive flows. When you look at the analysis of what is a Bitcoin treasury company, you definitely see that it's not representative of the reality. Uh, Everything, as Michael Saylor said, everything that a Bitcoin treasury company do could not be done by a passive vehicle. And so the capacity to go into traditional credit markets and raise specific instruments and the possibility for the Bitcoin treasury company to have a very specific strategy and the fact that when investors sell shares, the company keeps the Bitcoin and the fact that it's literally an operational company as well,
Mm-hmm.
we literally have 100 people as well, and so doing operational activities on the side, and it's the same as strategy. And we have an operational treasury strategy. And so what is really happening is that the treasury business model is not new. It's been going on for hundreds of years with the central banks accumulating Bitcoin. At the same time, this is a private type of strategy with a company that is really accumulating value on its balance sheet, which is a completely discretionary decision from the management and a discretionary strategy operated by a management team that is focused on increasing Bitcoin per share, the same way that a company would be focused on accumulating fiat per share, which makes no sense, but which is the traditional way of doing things. So in that respect, you have traditional boxes that do not fit completely with the new way of doing business in Bitcoin. And you can see that in the latest evaluation, the latest rating of strategy by S&P. S&P rating strategy without taking into account Bitcoin on the balance sheet. What are you talking about? Doesn't mean really anything, but at least they do it, and it's positive because It allows the company to check a box for some types of investors. It opens literally trillions of dollars of opportunity for
Yeah.
strategy. In that respect, this index is opening a consultation, and the result can either be slowing the adoption or it can be accelerating the adoption. At some point, this index has to solve this question, and if the question is resolved through that consultation, it will be positive. And if the result is slowing down adoption by removing some passive flows, it would not be that positive in the short term. But over time, it will be completely inevitable, and you will not be able to avoid taking into account those companies that will be the largest in each respective industry. So, yes, it's an issue to be dealt with, I think, for the industry. At the same time, we waited for a lot of years to get the Bitcoin ETFs, and if we have to keep educating and to provide what is really the treasury model, that will be necessary, and it will be done, and it will take a bit more time. What that means is that there is much more opportunity to come because those frictions are not yet completely resolved. And so it's a bit like investing in Bitcoin before the ETFs. The price was cheaper.
Yeah. See, and Alex, because all of like we are completely aligned. Um, how do you see, in your eyes, the end of this year? I mean, like we've got like 5 weeks left. It's not very much, and then December is December. How are you seeing year's end with Bitcoin and also with the macro of the world? Because again, like uh, for us, besides all of this that we're chatting about and the indexes and so on, there is also, at least what we're seeing is that the macro context is also in an interesting time. Like it's like we're in all-time highs, but it's not like 21 where the world was like super mega bull, everybody like just deploying capital and so on. It's like we are in all-time highs, global all-time highs, right? And SP 500 with Bitcoin and to a couple of weeks ago as well. Like things in general, gold, everything is in all-time high. Yet everything looks so weak, or at least this is what we sense. This is what we feel. What is your macro outlook and perspective?
My perspective is that there is a lot of people struggling in the world right now. A lot of jobs are being either removed or at risk, with a lot of AI that makes it much more difficult for young people to get a first job. A lot of people that have seen their salaries decrease in a substantial way in real terms, compared with the real monetary inflation, and that this has real effects on the economies. A lot of countries in the world have security issues, have a lot of economic issues. You see a lot of countries that are starting to deploy plans of subsidies, and you see that there is a perspective of having lower interest rates,
Mm.
and countries themselves realizing that the only solution to pay the interest is to print more fiat currency. And so, in that respect, yes, we see the solution on our side as Bitcoin maximalists, people operating on a Bitcoin standard already and having hope for the future because we have found the solution. At the same time, when you go outside and you meet people, you realize that 95% of the world, if not more, have not really embraced completely a Bitcoin standard. You can really see that even with corporations. Not every corporation has a Bitcoin reserve today. It's not even a minority, it is minimal. So, in that respect, you can imagine the kind of potential desperation of corporations that do not have Bitcoin and have to compete with a real inflation of 10 to 20% in real terms, and the competition of new companies emerging with AI type services that completely disrupt some sectors of the industry. and capital flowing completely in a centralized way to AI type projects instead of other types of industries. And so you have this transition of the world towards digital intelligence and the realization of so much powerful people around the world that the fiat monetary system has a lot of limits, and so a lot of scarce assets, and Bitcoin being the king, are gaining traction. Then you would ask, why is not Bitcoin going up parabolically in that context? And you can then relate to the other side that I mentioned before of traditional players that either do not have an interest to participate or do not have definitely a vision and an understanding of what this represents. But my understanding today is that in every meeting I've been with traditional financial institutions and some of the largest ones, the leaders of those banks, financial institutions, now completely agree with the overall issue of monetary debasement. And I would say that the first initial effect of monetary debasement on 90 plus percent of people and corporations is that it makes people poorer so they can invest less capital. And so, in that respect, Bitcoin, when the different large institutions go from understanding to action, is going to pick up again. And you see that historically with Bitcoin picking up very aggressively 6 to 12 months after gold has peaked as well. And so that is really something that is likely to happen, is that there will be much more buying pressure than selling pressure in Bitcoin over the following years. And if that is clear, then the largest Bitcoin accumulators will have the best opportunity to win in that market.
Alex, I mean, this is pure gossip, right? But again, for me, it's just funny. Now we're seeing like the whole JP Morgan shorting MSTR kind of like apparently this thing going on, MSCI. Do you think that this is just a organic and typical, let's say, um, thing of like when things get bare and to the downside, and basically people making wood out of the fallen trees? Or do you think that is there any like bad actor plays and so on, or just a coincidence again, and that we're seeing these things like because again for us it's just like uh, how is it, but we never talk about these things, and now suddenly like Bitcoin is below 90K and we're starting to see all of this comes afloat, which is noise. In the long term, it's just noise, but it is what is happening today, and it is what people are talking about right now. And there is plenty of misinformation right now. I'm probably you've been seeing X and content in the last couple of days, and full of misinformation. People saying that Sailor was selling Bitcoin, which he was not, and this misinformation is circulating also with the same rest of the company. So for me, a concrete thing is like, is it just like the how the market behaves, or do you think that there could potentially be any bad actors or anything?
I don't know about bad actors. I think that people are free to buy, sell, short, long Bitcoin, and that over time, Bitcoin will completely obliterate the ones that sell or short it. At the same time, we are seeing the beginnings of new actors coming in that are testing new traditional market type of tools into Bitcoin. And so sometimes you can have some price suppression, or you can do a lot of interpretations in terms of the different interests of different banks in the world. At the same time, Bitcoin doesn't really care about all of this, and it's all temporary. I think the major aspect of this Bitcoin market is that a lot of the industry was a bit expecting some United States government accumulation of Bitcoin, and that has not happened yet. At the same time, it's been the most Bitcoin endorsing government in the history, and
Ever, yeah.
there are much more things to come for sure. And so this is just a matter of time. I've had reports of very important players in Bitcoin market making type of industries, and it appears as some movements that are not really comparable with what the industry was seeing before. And I think this is part of the infiltration within traditional finance. You can see different tools of traditional finance being applied to Bitcoin. And, some would call that some types of market manipulation. I would say that this is just Bitcoin starting to get into traditional finance. And at some point, traditional finance will also see that some of those tools will not necessarily be completely appropriate with the volatility nature of Bitcoin.
Yeah.
And so it's just a matter of time, and it's really an opportunity to buy Bitcoin at lower prices than it was before. So
Yeah.
I think that this is an opportunity both for Bitcoin and for Bitcoin treasury companies. You know, a lot of people were saying when Capital B was above €1 that the people that bought Capital B below €1 were lucky. And now that the opportunity presents itself again, then you can see the investors that have the long-term conviction and can really see the future of Bitcoin getting into those traditional financial institutions. The most notable aspect is that sovereign wealth funds are starting to get to notable positions in Bitcoin, and those institutions are not selling it. They are strong hands.
Yeah.
Something that is happening is that we were at 70% of individuals holding Bitcoin or more, and it's quite likely that over the next 5 to 10 years, that could reverse to 70% from institutions and corporations and government. And so it will be extremely hard for individuals to get to one Bitcoin. And so I believe that this is a window of opportunity where you have all of this information of governments, corporations, sovereign wealth funds, institutions all around the world that are literally planning to accumulate Bitcoin. And you still have this opportunity of Bitcoin going back to levels that we had not seen in a year and more. So I think that's really something to consider for people that are new to Bitcoin. And it's quite a very good experience for people that were new to Bitcoin like 5 months ago to see that type of volatility, which is not uncommon in a bull market, by the way. And so minus 30, minus 50% is quite common in a bull market in Bitcoin. So for me, it's a gradual uptake of Bitcoin that is happening, a gradual adoption. And the ones that will have the most opportunity will be the patient accumulators.
Yeah. And Alex, in here and in this of patient accumulation and so on, because like something important is that at least here, guys, and this is never financial advice, but the only thing that is not under discussion is Bitcoin's long-term perspective. Like at least here, we do believe that Bitcoin is the next currency that will power the world. So long term for us, nothing changes. What we are analyzing and trying to understand here is short term um, and more short midterm. And Alex, my next question for you is the following. We do not believe that we are in a bear market yet. Like we, at least from us, again, our financial analysis of Bitcoin right now within our team is we don't have the conditions to say like, hey guys, we are officially in a bear market. We just don't think that we're there yet. But let's assume for a second that we were there. What I want to ask you, and as the in this drawdown, the best performing stock in Bitcoin terms, which is what we care about. So your stock is the only stock that in Bitcoin terms is green as of now from October 10th, which is when the this drawdown started. Um, what do you think that will be key, or what will be this differentiator of the what will make companies the best companies in a red market, in a downturn for you? Like, what's your opinion?
For me, the most important factor is to not play around with the Bitcoin. I've been to a lot of conferences, and a lot of companies are becoming a bit desperate about raising capital, and they are thinking about what to do with Bitcoin and how to generate a 5% yield out of 5% of the stack. And this is not what investors in Bitcoin treasury companies are seeking. Investors in Bitcoin treasury companies are seeking a team that is very clear and very focused on one goal. And that one goal is to have the most pristine balance sheet, which means that you have to have the most boring asset side of your balance sheet, and to have Bitcoin in cold storage, and to use that Bitcoin in a way that maximizes your ability to issue securities on the liability side of your balance sheet. And that is the difference between a commercial bank, which innovates on the asset side, and a central bank that innovates on the liability side. And Capital B is completely focused on the model of what is really a treasury business, and the treasury business from an operational perspective, and a decisionary management focused on maximizing Bitcoin per share, is to issue the best securities in the market. So now the challenge in a bear market, because you could say that we are not in a bear market in Bitcoin, but we've seen a bear market in Bitcoin treasury companies. So in
Yeah.
a bear market, for at least a Bitcoin treasury company, what matters in terms of capital raising capacity is size, is clarity, and its regional dominance. So Capital B is focused on those three elements. In terms of size, what this means for us is we focus on large transactions that can take time, but that can be transformational for the company to reach the zone towards 5,000 to 7,000 Bitcoin. And at the same time, preparing the ground for large scale issuances of institutional type products and raises. And that is really the end goal of a Bitcoin treasury company, to provide peace of mind for investors as the company grows its Bitcoin per share in a way that does not do harm to the retail investors that believe in the future of the Bitcoin treasury company in its local market. In this market, I think there will be even more competition that will come, more companies will come in this market, and more players will innovate in more aspects and try more things. But I'm convinced that the best model is the simplest one that can be effectively executed in the best way. The best model is the one of strategy, and that is our focus at Capital B. And the fact that Capital B has this clear strategy and this clear focus, and that has completely that can be completely observed in all the financial instruments that we have issued, is definitely one of the components that can explain part of the outperformance of Capital B in the industry, at least the recognized leadership overall in the world. And so we will maintain that clear vision of eating capital markets in Europe and in the world. And that will take some time. Strategy at the time back in 2022, 2023 had to go through a 2 year very severe bear market in Bitcoin with the FTX drama and so on. And that was followed by the most explosive outperformance of Bitcoin that gave birth to the whole industry. And so you have to keep in mind that strategy just innovated with credit in terms of the digital Bitcoin backed credit earlier this year, frankly. And so that can tell you that yes, the development of the digital credit industry can take 4 to 5 years to reach levels that are extremely important in each respective regions. At the same time, looking back 4 years from now, it will be completely evident that this was the right track. This was the highest demand in the market. And the reality is that for the 90% plus of people that I mentioned before, the 10% yield offered by the preferred is the deal that a lot of this population that forms a lot of the majority of people in the world want to take because they typically cannot take the volatility or they don't yet understand Bitcoin and they will come to the realization later on. But then you have a group of fierce, convinced, courageous people that are standing on the bridge and crossing the bridge before the others. And those will be the ones that will settle down before and create a whole new industry and be at the foundational level of this industry. And at the end of the day, get more Bitcoin than others.
Alex, as we get to the final part of the show, two final questions, which is one is how tough can it become for treasury companies to raise capital in a broader red market? What are you seeing? And the second question would be we have roughly 3,000 people across all networks right now watching. Any final remarks you want to share with us, as always?
Sure. I think the most important thing for a Bitcoin treasury company is to have an operational reserve that is enough to cover for its normal expenses. That's what we've focused on at Capital B, with treasury business cost of about 2 to 3 million per year. It can vary, of course, and be higher or lower, but that's rough numbers. And then you have the operational treasury that represents 4.5 million euros and 59 BTC. So that is definitely extremely important for a Bitcoin treasury company to have the resources to meet its ambitions and to be able to prepare carefully and thoughtfully for the best capital market operations and the best transactions and the best consolidation opportunities. So that is the focus of Capital B, to be in a position to take advantage of the best opportunities in the market and to create them in the market. So that is extremely important. Then in terms of challenge to raise capital in a bear market, where the liquidity is much more present when the market is going up. At the same time, it is during these moments as well that investors recognize the most solid and the most important companies in an industry. So we are completely focused on both education and as well building the foundation that is required to go to the next steps in a way that can then provide a form of explosion when the market gets back on its feet.